So, what was the advice that you got from the developer? Let me ask you that.
Yeah, that was so I called a developer locally here in the Philadelphia suburbs market, and somebody that I had a lot of respect for, who I saw all the time. I drive by his, very large multifamily, industrial, retail, all kinds of different projects. And I cold called them, and to my surprise, he actually picked up, which a lot of successful people will do, because especially somebody in the development space, because they don't know when the next opportunity is coming, and who's going to call that has something for them. So a lot of times you'll be surprised they will pick up. And he was graceful enough to talk to me. And what he said was, I asked him, how could I be a developer like you one day? And he said, you got to put the reps in every day. You got to put the reps in. You got to do it every single day. And that's exactly what we're talking about, right? I didn't say it like that, but that it means the same thing that from what he said was, you got to put the reps in.
I'm your host, Vinki Loomba. I'm a real estate investor and a fund manager. And on this show, we go beyond the basics to uncover real strategies, real stories, and real opportunities to help you build wealth through real estate investing. And today, I have a really, really special guest, Peter Neill, with me. Peter is a seasoned real estate investor and operator with over a decade of experience in fund management and real estate operations. As a co-founder and partner at GSP REI Real Estate Investing, he specializes in developing and redeveloping single-family workforce and affordable housing, creating consistent cash flow for investors through innovative fund offerings.
Iggy, thanks for having me. It's great to be here.
Likewise, I'm super excited for our conversation because today we'll be discussing building passive income through real estate syndications and what every investor should know. Passive income is a key to financial freedom. We all know that. And real estate syndications offer a powerful path to get there. By pooling resources with other investors, individuals can access larger cash flowing properties without the demands of hands-on management. And that's the key actually, because your hands free and then you can do whatever you wanted to do. And syndications allow investors to earn steady returns while seasoned operators handle the heavy lifting, making real estate investing a truly passive. So let's start with the introduction and a big picture, Peter. For those who are new to this, what exactly is a real estate syndication and how does it create passive income?
Real estate syndication is a form of pooling capital together. So, you might only have 25,000 or a few hundred thousand or even a couple $1 million to invest, but you don't want to put it all in one deal. Real estate syndication allows you to maybe write a $50,000 or $100,000, or it could vary depending on the deal. And this way, you'll own a percentage of it along with a lot of other investors. And as you said, it's a form. It's typically a way of being able to invest along with an operator, and ideally somebody who's done it before and has experience, and you can leverage their experience, their team, their resources, all that kind of stuff, and then ideally just kind of sit back and collect checks and show up to the reviews and read the financial reviews and reports and things like that and statements. So it's a way of pooling capital together to invest into a larger deal than you might be able to do by yourself.
Oh my God, thank you for sharing that. I love that how you said sit back, expect a check. So how did you do it? Tell us about your journey.
Yeah, so I got started. It was a little over 10 years ago. I took a job at a distressed mortgage investment company. I had no idea what that meant. I think it was advertised to me back then as like a real estate investment company, and but it's a little different. Distressed mortgages are when you're buying the mortgage that's collateralized to the real estate. So it operates a little differently, but at the end of the day, your collateral is the brick and mortar behind that loan. So I got started in sales and marketing for that company. We sold a lot of courses. We had a platform where we sold individual loans. So like the course taught you how to how to do workout agreements, how to execute when you buy a distressed mortgage to getting to the point where it's actually making money for you. And then the platform was there for people to purchase individual or small portfolios of distressed mortgages. And I quickly transitioned to investor relations. So that company raised a lot of capital from accredited investors through 506c funds. And at the time, the CEO was really the only person doing fundraising. And I was able to quickly transition into the IR side of the business, investor relations. Probably had about 6 different fund offerings, a little over 80 million raised during that time. And we grew it from just myself and him to a team of investor relations professionals and kind of manage the entire process of when an investor first finds you and all the channels with how they could find you to getting to a point where they're writing a check and actually investing with you.
So let's talk about that journey, actually, the IR, investor relations. So it's a process in itself. Like you
Sure.
said, you had the system in place, so you did not have any system in place when you started because it's like kind of one-man show. And you join hand with somebody. So might have put some systems in place, some processes in place. So if you can take us through that journey, how you got started, how you were doing it, and how you're doing it now. What's the difference?
Yeah, that's a great question. And one of the biggest differences between what I was doing back then versus what I'm doing today is back then it was you was working for a company. So the president, the CEO, the one of the co-founders of the company, he was really out going to all the events, just constantly traveling to different real estate networking events and conferences and things like that. A lot of times speaking all over the country and then doing a lot of local events as well. We would host events at our office where we would bring people in and have, drinks and presentations and things like that. So it kind of all starts with the marketing channels. He wrote an ebook, and the ebook would be shared on the website and through Bigger Pockets and things like that. He wrote for Bigger Pockets, so he did a lot of articles. I think it was every week he was writing articles. He's very active in the forum, so it kind of starts with the marketing channels, and that draws people in through content, through books, through articles, through speaking engagements, through podcast interviews, just like this. That's typically what draws investors in. And then from there, once they've come in, it's usually, your website's built out. Ideally, you have something where, they share an email and maybe some information on whether they're accredited or not, maybe their experience, that kind of thing. And it may take you to another part, a password protected, or behind the door part of the website where you're going to get information on the fund opportunities, what's available. These were always 506c funds. So just to preface that, so we were always able to advertise what the returns were and things like that. And then from there, just ideally wanting to have a conversation. In this day and age, the internet's made this business very, very accessible. And a lot of times there's some companies where, like the large Regulation A and crowdfunding sites where you might never even talk to somebody. A lot of times the boutique firms and the smaller, more personal, investment firms want to have a conversation. And that's where a lot of the investor relations process comes in. So making sure that somebody understands what you do, how you do it, what they're investing in, how it's going to operate from there, all that kind of stuff. Because this is not the kind of business where you really want any surprises at the end of the day. This is where people you want to make sure, because it works both ways. The investors don't want surprises where they think they're going to get paid here and then, or they're going to get a return of capital here and there, but then they don't, and they didn't read the fine, words and the little words in the paperwork, that kind of thing. And on the opposite end too, the operator doesn't want that either. As a good operator, as a fund manager, you don't want your investors to be upset or confused over what the terms are or how things are going to work or something like that. So the investor relations is really making sure that the investors are right fit for the company and the fund offering or the syndication, and then vice versa. Making sure that the fund offering and the syndication, the opportunity is right for the investor. So it involves a lot of questions, getting to know each other, all that kind of stuff.
Yeah, no, thank you so much for sharing that. And then I know the biggest difference that you highlighted is, when you started, might be like more kind of human touch right there versus now you're using a lot of technology. And I
Sure.
don't blame you because everybody's using that and technology is the way to go because we are so tech savvy these days. And that's the easiest way to reach out to people. And the business that we are in is, like you said, very well put it out there, that is all educational.
Hmm.
So we are not selling anything. We are buying, yes, obviously our deals, but we are not trying to sell. We're just trying to sell the education portal. Basically, we're sharing the
Mm.
knowledge, how things work, and then people come on board. So here I wanted to ask you this question. Despite all the technology in place, even the AI tools out there,
Sure.
because you're writing your ebooks, your blogs, your website, your lead magnets, 20 different kind of lead magnets that you have mentioned,
Yeah.
to draw people in your funnel. But that's the first step to get them in the funnel, right?
Yeah.
But what after that? At some point, you still need that human touch. Do you feel that or no?
Oh, 100%. Yeah, I think you do at the end of the day. I think it's important to have all those, pretty much everything that you're going to discuss over the phone or in person or at a Zoom conversation like this. You could have processed out and you could have it available to them through your website, through your content, through articles and podcasts and interviews and things like that. But I think it's important too that you have a conversation. You can't they can get to know you that way, but you really can't get to know them that way. And I think that's such an important part of the business because it's a partnership, right? It's a relationship. An investor's going to be with you for a certain period of time. It might, and typically I don't know anybody that really wants it to be 1 year either. You know what I mean? You might have a 1 year term, but ideally you might want short terms but long term relationships. So ideally, from an operator's perspective, you want investors who are going to be with you for a while, and when their term comes due, ideally they're going to roll their investment. They're going to ideally add new money to you, that kind of thing, because money is the fuel of the business. I mean, money allows you to go out. For us, we purchased single family homes back in those days, with distressed mortgages that would allow us to buy distressed mortgages. So you need to have capital. And in order to get the capital, there's a lot of different ways to do it with financing and things like that as well. But in this case, raising equity or even debt from accredited investors through your fund, it's very important that you're building a relationship and ideally a long-term relationship that's going to work out, fruitfully for the both of you. So I think it's crucial. I think that it's important to have all of the online resources because I know a lot of people who, they work, they have full-time jobs, whether that be 9 to 5, which is, and typically if you're a accredited investor and you're accredited through your income, the 9 to 5 isn't really so much a 9 to 5. You're probably working 8 till 8 o'clock at night. I mean, you're working many, many hours to be making $200,000 plus a year. So it's usually not just a 9 to 5. It's usually a little bit more complicated than that. And then for others who are accredited through net worth, they might have a business, they have a portfolio that they're managing themselves. So a lot of times accredited investors tend to be pretty busy, even for those who are extremely passive and they've kind of gotten out of all of the active management of their portfolio and they've gotten away from working a W-2 job or something like that or running their business, even though they're busy with now doing all the things that they wanted to do from a financial freedom perspective, where they're traveling, they're spending time with their family, they're going to the gym, all that kind of stuff. So having all that content accessible through your website, online, that allows them to do their due diligence and get to know you on their own time and at their own pace. And it also allows for them to hit pause, and rewind and to take notes and all that kind of stuff. I mean, something that when you're in a phone call, you can't necessarily do. And this way too, when it allows to make sure that when you do have conversations, that you're not wasting any time, that you feel like all the simple questions or a lot of the just the basic questions have been handled, and now that time can be better spent getting to know each other, seeing if it makes sense, but then also maybe answering some of those more complex questions. Because I always think there's a lot of times I get this where people will email me something, and I've like, next thing you know, a half an hour goes by and I've written like a dissertation. Because with real estate, there's always a lot of context involved. And as I said, I'm not a fan of surprises, so I like to make sure people understand, you know, Well, typically it goes this way, but if this happens, that and this, and so there's always a lot of context, and that's where I feel like if you really want to understand what you're investing in and all the different ways it can operate, you can't get away from a conversation because there's no other way to fully understand the context sometimes behind certain aspects of a fund or a syndication and how it's going to work.
I agree on that 100%. I think that no matter how much technologically we can get advanced, the human touch has to be there because that's the first comfort level. Because I think that's the way we are conditioned over the years. I
Sure.
do not know with the AI being in place now or the human AI is going to be taking over the world some point, it
Yeah.
might change in the coming years because it's a paradigm shift right now, the way we are seeing the things are happening. But I think by the end of the day, we still want that warm, cozy feeling. Okay, we are going with this person because we are building this trust relationship with Peter or
Yeah.
Vinky, and we trust them. And then they are just betting on you, Peter, not your deal,
Yeah.
because
Like
they're
100%.
trusting. And that's the reason they wanted to have that relationship. So while you were talking, this weird kind of question came to my mind, but let's talk about that.
I like it.
You talk about the corporate job, you said people have a W-2 job and it's
Sure.
8 hours, 9 to 5 kind of thing, gig for
Yeah.
most people. But a lot of times, people end up working 10 hours or they say, oh, I work 80 hours a week, not
Sure.
40 hours, but they're getting paid for 40 hours. So basically they're trading their time for money, right?
Sure.
But they're so much confident about their job 9 to 5. Even they're putting more hours, even they're making, quarter million or maybe less than quarter million a year, maybe making 100,000 a year. They're so confident about that space, they feel like,
Mm,
okay, this is my security. I want
mm,
to go to work. I wake up, I need to go, I need to go. So why don't they feel the same thing about the investing, any kind of investing, whether it's a real estate, stock market, whatever. I just feel like my understanding, my experience, because this is something is not part of their experience
sure.
because they do not have enough education. They are not trained enough to feel that confident. Okay, I don't have to trade my time for money, but I can put my money to work. So I
Mm,
wanted to hear from your experience, your viewpoint when you were talking. I'm like, okay, let's dig a little bit deep over here and kind of demystify a few things for people, so
mm,
that their comfort level changes, like a mindset shift, basically. It's like if you
yeah.
don't know something, you don't want to do it. And
Sure.
that's how I strongly feel. I think that's what you've been talking the whole time through all this multiple lead magnets that you're talking about, because you're trying to educate people from different ways to bring them
Mm,
forward. So
yeah.
talk about that.
Yeah, I like that. I like the agitate word. I'm picturing like a washer or something. Yeah, but it's important. Yeah, I mean, like you said, because it's so easy to just go about your daily life and get comfortable, and not until something happens do you then need to make a change or something like that, and that's when it's too late a lot of times, right? And that's really when you put yourself kind of up against the wall, and sometimes that works out for people. I mean, but it doesn't. That can add a lot of stress, and the older you get, the more responsibilities you have, the more bills you have, all that kind of stuff. That's an unbelievable amount of stress. It's a little easier when you get out of school or something like that and you put your back up against the wall, and you can fight your way into a job or into something. But the older you get, that's not really a winning strategy. I would also say that the confidence that you have or the comfortableness that you might have in a 9 to 5 or in a corporate position, that tends to be an illusion. You know what I mean? Like, because no matter where you're at, what job you're at, or no matter how small the company is or how big the company is, you can always be replaced at the end of the day. Things always could happen, whether it's a medical thing or whether it's just something crazy at work or you get into an argument with somebody or people butt heads or, the company changes, the economy changes, whatever it may be. I think a lot of times that confidence is an illusion. And I grew up in a family where my mom was a Catholic school teacher. My father was a property manager for CBRE. So there was always uncertainty, with what the school districts were going to do, and what the archdiocese was going to do, and with my dad at CBRE, and he was at a couple other companies too. That was based on the economy, and how much how well that whatever asset class he was working in at the time, how that was doing, and whether whoever he was working for was owned a lot of properties or they were in disposition mode and they were selling a lot of properties. I see it now. My brother's in corporate America. His his wife's in corporate America. So, and I have a lot of friends in that business where it's just usually the confidence that this is going to be here is somewhat of an illusion, and that could be taken away at any time. And then really, the higher up you are on the food chain, sometimes the harder it is to quickly find another job. I mean, the larger your salary is, sometimes the harder it is to replace that because it's supply and demand, right? There's just not as many people, not as many jobs for the people making that kind of money, that kind of thing. So I think to your point, too, it's from an educational thing. A lot of times we could tell ourselves that, what do I know about this? Or what do I know about investing? What do I know about real estate? I don't know anything. And when I got started, I didn't know anything either, and it takes time. And sometimes that education and the knowledge is where the confidence is really at the end of the day. To your point, it's like you don't have the confidence to get started because you don't have the education. But in order to get that confidence, you need the education. So I would say to anybody, find some time. I mean, try to find some time, try to carve out a little bit of time, just for a podcast, for a book, for articles, conferences. I think are a good way to do it as well if you're educating, because you can talk to people in person and in real life. I love to make phone calls as well. Just random cold calls and things like that. I spoke about it on a LinkedIn post I did a week ago where it was about just cold calling a developer, and the advice that I got, stuck with me for even till today. And I think about it all the time. So I think it's just important to, you know, kind of slow down and understand the compounding effect isn't just the financial, effect. Compounding works in all ways. So it's just about taking, steps little by little, laying bricks each day, and understanding that you don't have to know everything on day one. You're not supposed to know everything on day one. I'm 10 years into the business. I feel like I'm still learning all the time. And that's one of the things I love about this business is there's so many different asset classes. There's so many different strategies and ways to create value and things like that, that you should never get bored in this business. There's just, because you're probably doing it wrong if you are. But I think it's important that you got to get started somewhere. And ideally, the mentor thing is always there as well. I think it's not as easy as people sometimes make it out to be, like, oh, just get a mentor. It's just like you typically gotta add some value in some way, shape, or form, or you gotta spend, you gotta be able to, you gotta cut a check, to be part of a program or something like that. But I do think can be very valuable if you get the right one. And I just, to your point, I think the education is so key that it can't be overlooked. You really need to spend the time and probably spend some money to make sure that you lay a solid foundation there. And then this is a learn by doing business as well. So the quicker you can get into something, mitigating risk as much as possible, but as the quicker you can get into something, you're going to learn on the job. There's going to be a lot of on the job training, and that is irreplaceable in this business.
That's so true. You said it very well. So, what was the advice that you got from the developer? Let me ask you that.
Yeah, that was so I called a developer locally here in the Philadelphia suburbs market, and somebody that I had a lot of respect for, who I saw all the time. I drive by his, very large multifamily, industrial, retail, all kinds of different projects. And I cold called them, and to my surprise, he actually picked up, which a lot of successful people will do, because especially somebody in the development space, because they don't know when the next opportunity is coming, and who's going to call that has something for them. So a lot of times you'll be surprised they will pick up. And he was graceful enough to talk to me. And what he said was, I asked him, how could I be a developer like you one day? And he said, you got to put the reps in every day. You got to put the reps in. You got to do it every single day. And that's exactly what we're talking about, right? I didn't say it like that, but it means the same thing that from what he said was, you got to put the reps in. So
Action. Yes,
just
I love
take
that.
little actions
Mhm.
every single day. And same thing, like if you're underwrite, if you, a lot of times you need to get the underwriting correctly. You need to have some aspect of the underwriting on how a deal is going to pencil out, that kind of thing. So you're going to have a lot more confidence if you've done that 100 times versus if you're doing it for the first time. You know what I mean? So just
That's so
every
true.
day, little by little, right?
That's true. I really agree with you. And then I'm gonna highlight a few things that you said. Those are really
Hmm.
good. And then sometimes it's a good idea to slow down to speed up. And I say not even sometimes,
Yeah.
I think most of the time, you should always slow down to speed up because when you're slowing down, you're going into the kind of responsive mode. You're looking at the things more strategically and responding to the things versus if you're trying to speed up, speed up, speed up. It's like you're in the reactive mode. And then when you're reacting, your decision-making power is pretty much gone. You're not making the right decisions. So I
Mm,
love that how you said that. The other thing that you mentioned here is get a mentor. Everybody talks about get a mentor, but getting the right mentor is more important than just getting a mentor for the sake of getting a mentor. Because then for that, you need to understand who you are, where you're coming from, what your purpose is, what your mission is. Mission is just like your being, basically. You need to figure out who you are, why you're doing something. And then you're going to find the right mentor. Right mentor is going to show up for you to guide you where you want to be. And that's very important. And the other thing, the most important thing that you said was, I really love it. I resonate with you. You said, be curious, be on the
mm.
learning all the time, be a learner. I'm a lifelong learner, and I think you should be a learner. For me, if I don't learn something new every day, that day is wasted for me. So not how small it is, it does not matter.
Hmm.
So I was like, I'm so curious about life. I wanted to learn, and everybody has something to teach you.
Sure. Yeah.
Yeah, it's not like that you know it all. Because when you think you know it all, you're pretty much gone. Done. You're kind of done for this life. Because
Yeah.
you gotta be curious all the time. And you need to, the more curious you are, the more you're opening up to receiving. And
Mm,
when you're opening up to receiving, more opportunities gonna come knock at your door. That's the way I look at it. So
totally agree.
thank you for just putting that into perspective. I really enjoyed that. So one question I'm going to ask you, somebody's looking to start. What specific question should an investor always ask a sponsor or
Mm.
syndicate or a fund manager before they get started?
Yeah, well, Vinky, I'll throw this out. I think even more important is the questions you ask yourself first. You know what I mean? Because I think that's so crucial. I think, and I love what you're saying about like slowing down, you know what I mean, in order to speed up, because a lot of it, if you want to do, if you're into the passive investing side, or even if you want to get on the active side of things, which a lot of accredited investors and people want to get into, like you said, I just think you're aggressive, you're ambitious, you want to do all that, but you got to slow down. And I think you got to slow down so much to the point of that there's a reflection period where you really just, okay, who am I? Think about your past life, and where you grew up, and your parents and your family and all these things. It might be painful. I think a lot of times it is painful for us to do that. That's why we don't do it that much, just because we don't want to live in the past, that kind of thing. But I think it's important to understand it, to show respect to it, and it helps to kind of get a full picture of why we are who we are today, and then to look at who we are today realistically, and then start to zoom out from there to where you want to be and all that kind of stuff. So I think that's so important to understand before anything, before you have any conversations with operators or anything like that, to try to really have that self-reflection time and understand who you are and know yourself, right? That you hear that term all the time. But for your question, what is like the most important thing to ask an operator, that kind of thing. Yeah, I think just who they are. I mean, I understand what their story is. I mean, kind of just like how we started this conversation. It's like what's your story? How did you get started in the business? Because that's going to vary drastically. For me, it was I right out of college, I took a job in real estate, and that was it. I mean, it was all my, I wanted to be in media and broadcasting and stuff like that. And that's what I went to school for. And media entrepreneurship, and I thought I'd be doing all kinds of different stuff, but then I got into real estate. I never looked back. It was just like, this is amazing. Like I can't, my father was a property manager, so I knew about real estate, but I thought it was something that I thought that's all it was. You know what I mean? I didn't realize there was a whole nother world out there. So everybody's going to have their own unique story. I talked to a lot of people who are, in IT backgrounds or engineering backgrounds or sales or medical sales, or I've talked to pharmacists. I mean, you name it. I mean, there's just so many people come from different areas. So I think understanding what their story is, where they come from, what they're doing today, and then trying to understand like what their values are, what the mission is, what their vision, kind of understanding how they see the world when it comes to from a the kind of thesis on what their strategy is and how they look at the market and all that kind of stuff. So it's like understanding their story and then how that story has shaped what they do today and why they do it and all that kind of stuff. I think is a great way to get started and to kind of fill the picture out to who they are and what they're doing. But really simple, you know, it's who, what, where, when, why, and how. And I mean, that's always a good way to start. And then you can kind of take it from there to drill down even further from, you know, what's important to you, that kind of thing.
Beautiful. So answer all the W's before right?
Exactly. Exactly. It's just,
Before we get
I'm
into
somebody where I like to break things down to the most simplest, you know, just what's the core, you know, understanding. So I can just, you know, compartmentalize it in my mind and then start to layer on the complexity from there. You know what I mean? And really take it further. And this way too, and from the, as complex as I get, I can still put it into these simple buckets. You know what I mean? So, but starting with the story is a fantastic way to do it. You know what I mean? Who they are, what they do, why they're doing it, all that kind of stuff will really give you a good understanding to some degree, and then you start to take it further from there. If that all
Yeah,
lines up
I
for
know.
you.
I like that. I resonate with you 100%. I think those are all the important questions to others to say, ask all the whys first to yourself. That's very important. But the other thing that you're talking about, the risk management or the
Mm,
risk appetite,
yeah.
So from an investor's perspective, from your experience, what are some of the hidden risk in syndications, especially in the real estate investing, that aren't talked much about, people like still wanting to know but do not have enough information about?
Yeah, yeah. Well, that's a great question, and I'll do just the simplest thing, right? I look at it. People ask me that all the time. I look at it two ways: it's internal and external. So internally, the company you're investing in, what's the problem there? You know what I mean? Like, are the partners getting along? How do they know each other? You know, what's their relationship like? You know, do they live around each other? Are they all over the country? Is it like a virtual kind of thing? You know, the person you're talking to, are they just a fundraiser? You know, or are they actually part of the operations team and they're are involved in the acquisitions and the construction and the operate, all that kind of stuff, property management, all that good stuff. So internally understanding, you know, the risk that is involved in a real estate partnership. You know, real estate's a team sport. So chances are there's going to be a number of people on the team doing different things. Some of them are going to be internally, you know, and then others are going to be external. So it's going to be like a third party property manager or construction manager or general contractor, brokers, lenders, you know, all that kind of stuff. So just kind of understanding who the greater team is and trying to understand like who are the most important parts to, you know, to the wheel, where if something happens to one of them, is there somebody else on the team that can take that over, that kind of next person in line kind of thing, what's their experience, are things going to operate smoothly, that kind of stuff, because it could be a one-man band as well. I mean, and development too a lot of times is kind of a one-man band, but they have a million people on the team. I mean, they're orchestrating a large team with engineers and architects and general contractors and brokers and lenders and all that kind of stuff. So just kind of understanding, you know, internally how the business works and who the players are, I think is great. And then externally, the market, you know, what are the things, because a lot of those things they can control to some degree. Externally are like the things that you can't control. I mean, so the things that, yeah, you have to look at that from a micro standpoint, you know what I mean? So I think a lot of times in real estate, people get lost with the macros. You know, it's like they look at like all these macro trends of how office is doing or how industrial's doing or single family or multifamily or lending. And I think that's great. I think too, like from a passive investor just trying to get into the space or something like that, trying to navigate where should I go? What should I do? You know, the macros can drive it to some degree, but I think micro is real estate's a local game. You know what I mean? Like the
That's
supply
so
and the
true.
demand locally and all like that's really more important than anything because I'm not one where I mean there's office space around me that I would love to own. You know what I mean? There's office space around me that I would never in a million years want to own. You know what I mean? It's the same thing with any other asset class. So it's just sometimes the macros don't give justice to the local supply and demand and economic drivers and all that kind of stuff. So so looking at the external, not only from nationwide, what's trending, all that kind of stuff, but also local market, and really dialing into the supply and the demand in that local market. So asking the right questions in that perspective from when it comes to comps, when it comes to new supply coming on market, the absorption rate, all that kind of stuff, I mean, are all important things. But to dial it down to the most simple point, internal, external, internally with the company, externally with the market, and that kind of thing and then kind of dial that out, local markets versus macro and economy, with interest rates and things like that as well, that doesn't have to do with supply and demand necessarily with the product class, but has an effect on the business and how it's financed and all that kind of stuff.
That's so true. And I agree with you 100% that, it's more like a localized game. It's not like media spitting so much bad news all the time. And then people journalize things, it's like, oh my God, we are in a session. We are going into a session.
Yeah,
We are, there's no doubt about it. But you have to think, even in this challenging times, there might be a lot more opportunities out there.
sure,
Like,
definitely.
people are fearful, get greedy. So maybe this is the time to get greedy. But again, you have to dig a little bit deeper, maybe in the region or sub-region or sub-market, to figure out, or the maybe local neighborhood, like you have to go to the nitty-gritty in order to find like the golden nugget or that particular, winning deal for you.
Yeah.
It takes maybe a little bit more time now than before in this challenging time, but there's more opportunities, like you said. And at the same time, it's like the generalization is not applicable 100% to each and every deal
Sure.
or each and every investment that you're trying to do. So at this point, I'm going to ask you, what one piece of advice would you give it to someone who's considering their first investment in passive real estate or passively investing in real estate?
Yeah, I would say, make sure it lines up with your goals. You know what I mean? So getting back to what we were talking about before with knowing yourself, I think a lot of times I see people where they say one thing with the goals, but then the investments that they're looking at or the investments that they actually do are two completely different things. And this is not the case for that. You know what I mean? Like I remember when I got my real estate license, I had a person, one of the teachers there said, he was telling the story about how you're going to have clients where they tell you they want a rancher, and they want 3 acres, they got dogs and things like that, and they're gonna, you're gonna have them all out in the yard, and they want a second bedroom and all this stuff, and then you're gonna look for that for months and months on end, and after about 6 months or so, you'll lose contact with them for a few weeks or something like that, and you're gonna reach out and they're gonna say they bought a place, and it's in the city, and it's a townhome, it's a row home, it's connected, and there's no yard, there's I don't know that, but it was the kitchen they fell in love with, or it was the master bedroom, whatever it is. I mean, there was something had nothing to do with what they said the goals are. You don't want to do that when it comes to passive investing. Yeah. Because if your goals are to replace your income so that you can work less, you know what I mean? Or you feel like if there's any, you have a little bit more security or something like that, then chances are you might want to get into a new development play. I mean, or maybe you do, maybe because depending on the time frame of it, you know what I mean? Maybe you do, maybe you see a path to long-term ownership in a new product or something like that. So you see, there's little things like that. A lot of times, if you're looking for passive income, from a risk adverse perspective, you're going to lean more towards a debt investment. You want to get into lending. Lending you could do individually, or you could do it through a fund, that kind of thing. And then if you're looking for more appreciation and that kind of thing, more of like a value add or an opportunistic opportunity. So I think it's important to, when you understand yourself and you understand your goals and you understand the risk that you're willing to take, it's important to find an investment that aligns with those goals. But you won't necessarily know that until you understand what it is that you're looking for and what risk appetite you're willing to that you could sleep at night. You know what I mean? Like that you're willing to incur it in order to get that. So I think that's extremely important. And then having those conversations, like that's where it's important to have a conversation beyond just maybe the content and the material that you're seeing online and on somebody's website, is to understand, like, here's my goal. I mean, I'm looking for cash flow on day one. You know what I mean? Or I'm looking for, X% of cash yield within the first year, or cash doesn't really matter to me right now. I'm still working. I'm have a great job, I make a lot of money that way. I'm looking more for appreciation down the road. You know what I mean? Or I'm looking for something that's going to appreciate, be sold, or I'm looking for tax advantages or whatever it may be. So those goals, understanding what they are for you, short term, long term, that kind of thing, could be a great point, a great place to drive decision making when it comes to making and passive investments and the questions that you want to ask while you're doing your due diligence, that kind of thing.
Yeah, beautiful. I love that. And then you said one thing very good right there, because a lot of time we do not know what we want. Basically, I'm
Sure.
talking about in general public, average people. A lot of times it happens, you do not even know what you want. And until unless you know what you want, you're not gonna get it,
Yeah,
right? And like
exactly.
you gave the perfect example right there, how people are striving for something else, but they get something else. And then if you're looking for a passive income, you wanted to get your time back, you do not want it to go necessarily buy maybe a building, a single family home, or maybe duplex or something and start to do DIY because you got
Sure.
another for yourself now, right? So
Yeah.
it's not a truly passive income right there. So you said it very beautifully that you need to weigh out all your options, figure out exactly what you want, why you want it. So basically answer all your, like all your W's.
Yeah.
Why, how, what, whatever, how is actually with age. But, how comes like really later in the game, first answer
Mhm.
why, what, or, why exactly you're doing everything. Then you figure out how you wanted to do it. Then you're
Yeah.
going to figure out whether you wanted to invest passively or you wanted to do it yourself.
Yeah.
And that's very important. So this brings us to our rapid fire round. I know we're out of time, but you had so many golden nuggets to share. So we kept on going. So I'm going to ask you 5 questions at this time, and then you're going
Okay.
to answer it in one word or one sentence only. Are you ready?
Okay, let's do it. Yeah, if you haven't been able to tell, I'm a big talker, so one word might be a problem for me, but I'll try.
All right, we're gonna test it today. Okay.
Let's test it out. Okay.
So the first question is, what is one of the most important thing that you've learned in your life, and how did your life change after learning that trait?
Ah, man, wow. I would say, being loyal is an important aspect. I mean, loyal to whoever you're working with, who your partners are at your job, that kind of thing. There's always a line. You know what I mean? You got to understand the line. But I think being loyal is a very important aspect, and it leads to trust at the end of the day. And it's not always something I expect from others, but it's one of those things where I expect it from myself, and you have to live by example, right? If you can't if you
That's so
can't do it,
true.
then how can you expect from others? So I think a lot of us like that attribute. So I try to practice that myself. But with investors, when you're managing a fund, you got to do what's best for the fund, what's best for the investors. And you hear a lot of stories where people put themselves first, and they make some unbelievable fees on deals that don't go well and stuff like that. And I always think that's not, you got to be loyal to the people that have been loyal to you and put their faith and their trust in you. So I think being loyal is a very important.
Yeah, and I think that that's a good trait to have. And being loyal to yourself first is the most important thing,
Exactly.
because
Yeah.
whatever you can do to yourself, that's how you're going to present or project yourself to the outer world. So remember, one word or one sentence only. So the next question is, share one good book that you would like to recommend to my audience.
Win friends and influence people. Dale Carnegie.
I love that book. Oh my God, that's like a kind of Bible for a lot of people, right? And
Exactly. I go back to it all the time. You know what I mean, and I used to have it on my wall. It was like just the main sections of it and that kind of thing. I look at it all the time, and when I changed some things around, I took it off. But yeah, I always it's something I go back to regularly. I think it's a very important book, and it's not whether you're raising money or not. You know what I mean? It's just those relationships and tactics to grow it's important. You know what I mean? No matter what side of the business you're on, if it's capital and you're dealing with lenders or investors, or if it's acquisitions or brokers and owners and that kind of thing, or if it's execution with GCs and subcontractors and things like that, it's just being able to build relationships, to demand respect, and to also respect other people and all that kind of stuff is just such an important part of life in general.
that's true. And I would say again, can't stress enough, relationship is the most important thing in this world or in this business that we are in. And I think if you have a strong trust build trustworthy relationships, the money follows,
Yeah,
it's like you have to go beyond the transactional relationships in
sure.
order to create that space for yourself. Thanks for sharing that. So in one word only, what does life mean to you?
Hmm. I would say love, if I gotta think of one word.
That's
Yeah, I
good. That's
mean,
really good. That's
yeah,
a really good answer. Thank you. There's only three things in life: love, peace, and happiness.
yeah, yeah,
Those are the three things we strive for. And when we have that, nothing else matters. What is your biggest
exactly.
passion?
Say that one more time.
What is your biggest passion?
Passion. Okay, I thought you said distraction. I thought that's a good question.
Maybe I could add that one, but
Uh,
at this time.
passion, I would say communications, at least in this business. I mean, communications. And like I said, because that covers the gambit. You know what I mean? Like it's not just with investors, and striving to get back to people at a respectful, quick, period of time, because I know I appreciate that. I know other people do. But it's also, like I said, with general contractors, with subcontractors, with lenders, with brokers, with owners, sellers, just good communications. You know what I mean? Just getting back to people at a quick time. You know what I mean? Being open and honest with what the communications are, all that kind of stuff. I'm passionate about that. You know what I mean?
That's
That
good.
makes me feel good. You know what I mean? Like I can sleep at night when I know I don't have a lot of emails or phone calls that I haven't gotten back to, that kind of thing. You know what I mean? That it keeps me up. I'm always like, I got to get back to somebody. I hate to keep it waiting. So I would say I'm pretty passionate. I really do strive, especially in this business where I think that you can really make a name for yourself, and you can beat the competition when it comes to good communications, quick communications, but being truthful too. You know what I mean? Like we all know when you call like a Verizon or some big corporation, you talk to five different people, they all tell you five different things. So because they just want to tell you whatever you want to hear or something like that. So it doesn't mean that you always have to have the answer or something like that. But being able to say, I'm not sure. Somebody else on my team does that or something. Let me get back to you. Instead of making somebody wait for days and weeks and on end, I mean, that kind of thing.
That's true. I think it's more important is giving that feeling to your community, to your investors that you are there for them.
Yeah.
Once they got that, they don't even have that many questions because they know
Sure.
whenever they have a question, you're gonna be there for them. That's the key to the communication. So one last question, please make it in 1 to 2 sentences. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
Hmm. Wow. Man, I would say believe in yourself. Man, I mean, don't let other people dictate what you think is possible.
I like
Believe in yourself.
I like that because everything is going to turn out okay. I think that's what everybody tells
That's
me.
true. Yeah.
So no
Well, you
matter
know what?
what,
It's like don't let other people's limiting beliefs become yours. I mean, I think
exactly,
we all have a
exactly.
we all do that, and even your parents. And I mean, even your friends and your family and things like that. It's we don't know what they've been through. You know what I mean? Like you
Thank
never know
you.
where somebody else is. So have respect for why they think that and all that kind of stuff. But at the same time, let it just wash right off of you. I think that's so important. You don't internalize that. Don't make that your own. You could be your own person and you can think for yourself, and you can really craft your own beliefs and your own values and mission and vision and all that kind of stuff. And then a lot of times people that do that, and if you've ever done it in your life, you tend to see how the world almost conspires to make those things happen for you. So I think it's just very important to believe in yourself. And it doesn't mean not to be respectful of other people and their opinions when they tell you this, that, and the other. But make sure not to internalize other people's limiting beliefs, that kind of thing.
Oh, okay. Thank you so much for sharing that. And how can people reach out to you?
Yeah, so gspREI.com is a great place to get started. They can reach out. My phone number's on there. They could schedule time with me on there. I'm pretty active on LinkedIn. So Peter Neill, Neill. Everybody always forgets the L's. So Neill. They can reach me on LinkedIn as well. But the website's a great place to get started and learn more about what I do and who I am and all that kind of stuff.
Thank you so much, Peter. I really enjoyed our conversation today. Thanks for being on my podcast.
Thanks for having me, Vinki. It was great being here. Great conversation.
Thanks for tuning in to the Wealth Vibes Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.